You guys have asked for a couple's story, and today we have it. T and her husband are today's true budget. There is a lot going on here, so we are just going to skip the introduction and let's get right into reading the initial email that T sent in. Okay, let's zoom in and see what T has to say. And she says, I am a married mom of 4 adult children, which includes my bonus son. My husband and I are bumping heads every month when it comes to the bills and lack of funds, to the point where we created a mound of instant loans. It seems as if we are borrowing from Mary to pay Martha, and we have still fallen behind in our bills. Overdraft is killing our account, and the stress of it all is taking a toll on our lives. I have been watching many savings videos and still can't get a grasp on my household finances. My husband and I are both full-time salary workers. However, he is paid bi-weekly and I'm paid monthly, which makes things a little difficult when trying to create a budget, at least for me. I started working with DoorDash at one point, but because life has been lifing, that was short lived. I want to get to a place where all of our bills are current, have an emergency fund, and money in savings. My husband and I have been married for over 7 years, and it seems that we have been living paycheck to paycheck our entire marriage. I want to come up from under all of this and finally breathe again. I want to have a personal retirement account that I can contribute to as well. I know we have dug ourselves into this mountain of debt, but I'm desperately trying to get it together and live. I'm definitely at my wit's end and feel totally defeated. And down here she says, P.S. I have made some steps to decrease our bills. I used to have DirecTV for $3.96 a month on top of paying $108 for Wi-Fi. Now we have both for $289 a month. Now, I wonder how many of us can relate to T here, right? Lack of funds, mound of instant loans, fallen behind in bills, just all of it, right? It's so relatable, and she really struck a lot of chords with me. And this is why I started this series, you guys. There are just too many people that are in this same exact position and feeling this way of stress taking a toll, being at our wits' end, totally defeated. The hope here is by helping T and using her story and situation here is to help not only her, but anyone that's watching as well. Because in the end, we are not so far apart, right? So let's get to know our girl. All right, T, here we go. I know you've been biting nails waiting for this video. Okay, so my viewers, on the other packets that I have gone over with you guys here on YouTube, I just read each line item with no real commentary. And then we've been going back to those things that I want to dive into more. But with today's, I'm going to let you know a few things here and there so that we can tie everything together at the end, because as I said, there is a lot going on with today's video. So let's go ahead and get started. We have T, as I said, she's 48 years old and she lives in Florida. She is employed full-time, no dependents, steady work. She is not current on her monthly bills, as she has told us in the email. No emergency fund, no written budget, a very small amount into savings. And she wants me to know that she gets paid on a monthly basis and her husband is paid biweekly. And again, that has just made creating that budget for her very difficult. And she wants to focus on that budgeting, which is great. And her top 3 concerns relating to the budgeting is, number 1, she would like to create a budget that helps with the debt repayment. Number 2, she wants it to help her get her emergency savings of at least $1,000. And number 3, she wants to be able to spend and stay on budget and have money in sinking funds and for debt. Okay, so let's see what we've got to work with here. And here is her income and her expected pay dates. And we're just going to move down here to October. This is what T and her husband are bringing in for the month of October. He gets paid biweekly, as she said, $1,698 each time. She gets paid once a month, the last day of the month. She makes $2,352. So together, their monthly income is $5,748.94. That is very good, and let's see where it is going. And we will start with her bills and fixed expenses. She's got the mortgage up here, $1,029. She's got a car payment of $630. This is a property payment of $210. Now, I asked her about this, and they actually do live on this property. It is not some other piece of property somewhere else that serves no purpose. Their home sits on it. Next up is Verizon for $396. That is a very high monthly bill. She cannot switch providers yet because they do owe $924 total on 3 different phones. So they are essentially in contract currently with Verizon. Next is a truck payment of $1,228 a month. That is obviously a very, very high payment. And you guessed it, we will be coming back to that. Next up is a net credit loan for $127. Amazon Music 6, MoneyKey 70. Okay, so these loans, I did some math on these loans and my head about spun off. And I will show you guys later in the video. I'm going to say these types of loans should be 1000% illegal, but then again, student federal loans aren't any better and those are legal, so who knows. The least I can do is show you guys and hope that you do not get caught in one of these types of loans. Okay, let's keep going. She's got Atlas at $140, Amazon Prime, Milestone, that is a MasterCard for $58. Page 2, we've got Nationwide, $67. This is pet insurance. I asked her about that, what it was. We've got 2 Capital One cards, $70 and $50. Geico, $782 a month for car insurance. Yikes. Cable and internet, $289. Vivint Security, $29. Spotify for $12. Rise and Quick Credit. Now these come out bi-weekly, as you can see over here. So those amounts are actually doubled for monthly payments, and we will definitely be digging deeper into those as well. Let's move on to her variable expenses. These are pretty normal in my opinion. She's got electric and water for $250, gas for $120, groceries for $300, household $75 to $100 every month. And next up is the debt. We've got the Capital Ones, amount owed $600 and $1,935. We have Atlas at $1,789. MoneyKey, she owes $300. Net credit $4,500. Rise $2,079. Quick $2,648. Now we are going to take a closer look at the personal loans, the credit cards, and the vehicle payments. As you can see here, there is no interest rates entered in by T. I emailed her and asked her for those. Let's see what they are. Okay, you guys, I added in everything that was missing. We've got the car, the truck, the property, all added in, all of the interest rates and the amounts. And yes, this situation just took a turn for the worst. These interest rates, 199, 148, 178, these are not a joke. They are not fake. I Googled these companies and these are real numbers. Rise has loans as high as 299%, Quick Credit 185 to 225%. And yes, we will definitely be coming back to the debt. Let's take a look at her savings goals. She's got an emergency fund, as she said, 1 to 2,000. She'd love to max out that retirement account. She'd like to have a little bit in savings. And then down here, she would like to have another little bit of a savings for herself. Her husband's 50th birthday is coming up, and she'd like to have a little bit of money for car maintenance. Now, these things are all very important savings that I think everyone should have or be working towards. And they are not anything crazy, right? Just regular, typical stuff that I feel like any family would want. Okay, so after looking over the packet, the first thing I needed to do was see how far in the red T and her husband are every month. So to kill 2 birds with 1 stone, I also prioritized her bills. So if you are in this position where you just feel so overwhelmed and you don't even know where to begin, take a deep breath and start with your 4 walls. And that's what I did over here. This top section is her house, her land, her utilities, food, and household items, all of which are at very reasonable amounts. So she's good here. If her groceries were like $800 for two people, we could lower that. But honestly, the 300, I'm not even sure how she's doing that. T, maybe you, you could help me in that department because I've been overspending on groceries lately. And next we would want to go to the vehicles. Okay, yes, as we said, these are hefty car payments and the very expensive car insurance. Let's just stay on task for now and keep working our way down. And you know that we're going to come back to that. So we've got her cable, internet, pet insurance. Verizon is next. Then down here is her debt. And I did go ahead and put them in order from the lowest balance owed to the highest balance that she owes. And these bottom things down here are the absolute non-essentials. You probably already know what's going to be happening with these, right? So let's go over to what I've got covered up over here, which is the next column. And that is where I started subtracting from their income each bill. And let's see where we end up. As you can see, they start off fairly well. And then, yes, the inevitable does happen in the middle of the debt. Here we start to be in the negative, and they are $885.92 in the red every month, just the way things are if nothing changes. So we are going to start with these non-essentials. These extras, I would immediately cancel them. Amazon and music apps, just not right now, right? And this one, it is Vivint Security, and that is for $30 a month. Now, this may be very important to T, so if it is, I would get Simply Safe or the Ring cameras and not have the actual monitoring. Personally, I have the camera recording Simply Safe for $10 a month, but I could even let that go and I would still get alerts when there's activity. Pretty much everyone I know does it that way, the free way. I just live in crazy Port St. Lucie where all kinds of wackos love to show up on your doorstep. So if T is like me and needs some sort of feeling of security, I did keep the recording part. I also looked on Simply Safe's website and they do have a half off sale going on right now. And it was very reasonable. In addition to that, I looked up this Vivint Security and the word scam is used over and over on their reviews. Their system seems to be just not that great. Customer service also not great. And the cry wolf charge that seems to happen quite a bit with this service can get pretty hefty after a few times of happening. So let's just say that she adheres to canceling all of these. She would end up saving $62.88 a month, and then that would put her up here at the $823 in the red every month. And let's move back up here to the top because the only thing that I want to show T and her husband here is the property. At the current interest rate, which is 15%, and the payment that it's set at, which is $210, and the balance owed, the calculator tells us that it's actually unlikely that they can pay this off, and it recommends a payment a little bit higher of $237.50. So let's go ahead and do 238 and see what happens. Okay, 41 and a half years until it's paid off. And the total interest would be close to $100,000. I'm not sure who owns this land, but something is very wrong there. And all of this is keeping them from being able to even begin to deal with this. But I definitely wanted them to see that math. Now let's talk about the real elephant in the room, the vehicles. Okay, so we've got the two payments and the insurance, which is 3 vehicles. Her daughter is on their policy. And when you add that up, it is $2,640 a month just for these 3 things. This is their total income. So when we deduct their total income from their vehicles and the insurance, they are left with $3,108 to pay for everything else they need for the month. 45-ish, approximately 45%, almost half of their total income is going solely for vehicles. Okay, so the suggested amount that anybody should be spending on their cars is 10 to 15% of their gross income. Personally, I'm a 10%er on that, but I'm going to be generous and go to the 20%, and let's see what the math ends up being. So if we allow them to spend the 20%, they should be spending $1,148 a month instead of $2,640, which means they are $1,492 over. That is substantial. Are you guys freaking out right now? Are you thinking, oh my God, what will they do? I know you guys are. Don't worry, problem, solution, always. Let's just keep going with these numbers on their vehicles. And as I said, after they pay everything, just for the vehicles and insurance, they have $3,108 left for the rest of the month for everything else they need. So let's take that $3,108.04, and that means that every week they have $777 of income. So two people are working full time for $777 a week. So let's divide that by 2, and that comes to $388.50 each. Now, if they're working the average 40-hour week, that means that each of them is bringing in $9.71 an hour. Geez, Jen. Damn. Okay. Why did you just break it down like that? Because when the hard decisions that are coming need to be made, T and her family will be so disgusted with the situation that they are in that those decisions are going to be quick and precise with no second guessing. We do not want to work for the man, aka the banks, until we drop dead. No, we don't. So if they were actually at this 20% mark, their numbers would actually look like this. We would take the $1,492 that they're over, and we would put that back into their pot because they wouldn't be spending it on this. And then we could deduct the $885 that they're in the red every month, and they would actually end up being $607 in the black, and we could work a lot easier with this number for the debt that they have accumulated. I'm just being real here. Believe me, I do not like being the one who shines a huge beaming light onto someone else's errors. But now we know the absolute truth on the vehicle situation and how much that one section of their expenses is literally hammering them. So let's go back to this section where the cable and the internet is. And remember, in her original email, T let me know that she did lower this bill already by, let's see, she was paying $396 plus $108 for her Wi-Fi. So she was paying $504 for those two things, but she did get it lowered to $289, which means that she is saving $215. Girl, I love you for this. A for effort. And with Verizon, this is super high. So I dug a little more into this with T as well. This is 3 lines. All 3 phones are being paid in payments, which is obviously part of that bill, making it higher. And they're also paying insurance on all 3 phones, which makes it higher as well. And they are on an unlimited data plan. Okay, so moving on to the debt section, total monthly minimum debt payment for credit cards and loans only is $1,169. Again, just to make T and her family really mad at that debt. If we could add that back and have her vehicles at that 20%, so that would be the $1,492 that she's over on the cars, and adding back the $169 for all of her debt payments. Again, here comes my shining bright light. And T, I'm only doing this because I have to. If I'm really going to help you, that means truth, right? And here's my little truth teller, my calculator. That comes to $2,661 back in their pockets every month. T works full time for $2,352. So she could stop working completely and still have a little over $300 extra a month if the vehicles were at the high end of the recommended 20% of their income and they were debt free. Now that should definitely be enough to really dig into T and her husband's hearts and minds and get that motivation to an all-time high for sure. But we haven't even ran these numbers yet. Let me show you a few of them real quick, and then we're going to talk about some options to fix this. We are certainly not going to ignore these high interest loans and not shine my annoying light on these companies. I'm going to take this opportunity to make sure that every single person that is watching this remembers the names, never clicks their websites, and never even thinks about doing business with any of them. And we're going to start here with MoneyKey. Now, for some reason, here is MoneyKey here. For some reason, T is under the impression that MoneyKey is 0% and you only pay back what you borrow. Obviously, that gave me pause. This ain't show friends, this is show business. So I checked out their website and they are very adamant about this principal contribution plus their billing cycle charge equaling your minimum payment. And there is just a lot of what I call word garbage in here where they try to make themselves sound so different than any other loan, payday advance, or interest charging institution. Like down here where it says, what is a personal line of credit? A personal line of credit is an open-end credit product that allows you to make draws, repay, and redraw from your available credits. If approved, you can have access to funds up to a specific credit limit. The benefit of a line of credit is that so long as you make your payments on time, more credit will be available for you to draw. How is a personal line of credit different from an installment loan? And their answer is a personal loan, which includes installment loans, lump sum money that's already paid back, usually interest fees, blah, blah, blah. Word garbage. Each minimum payment includes a contribution towards your principal balance to ensure you are always paying down your line of credit. Oh, thank you, MoneyKey, for looking out for you. Show business. I'm not exactly sure of the specifics of her loan and the exact interest, but I did find this. MoneyKey rates can go as high as 295%. So there's that. Okay, who is next? Let's go to these Rise and Quick loans, 148% interest and 199% interest. And I'm just going to show you the math on these really quick. So with Rise, we have $2,079.87 is owed at 148.19%. And remember, this is a biweekly payment, so we're going to put $254.86 as their payment. Now, when you do this, it lets you know that the minimum that they are set at by Rise doesn't quite cut it. It's telling us $257 needs to be the minimum. So let's do the 257 like it suggests and see where they end up. Okay, so we're at 5.5 years with $14,000 just in interest for $2,000, you guys. And let's move on to Quick Credit. Same thing. We're going to put in the amount owed, the interest, and again, they are paying $400 per month. Again with the close, but just not quite enough. Do you guys think that's a coincidence? All right, so let's round it up and do 441 as the calculator suggests and see where we're at. Okay, we're at 3.5 years before it's paid off with $15,000 paid in interest. Again, this is for a $2,500 loan. Show business. All right, let's do net credit next. I'm going to punch in the numbers here. Oh, shocking. Here's the red warning again saying you'll never pay it off. This one says to basically double the payment if you even want to have a shot of being rid of it in this lifetime. So thank you, little credit card calculator. Let's do $243. And we are now at 13 years before net credit is paid off with $33,000 in interest. Now don't forget, the original amount borrowed is $4,500. So I don't know about you watching or how you're feeling at this moment, but I was absolutely livid while I was working through T's family's numbers, and not angry just for her, but for all of the other families that are caught in this web with Rise and Net Credit and Quick Credit. Capital One, I mean, you guys are no better. 30% interest. Let's do the higher balanced one. $1,935. Let's plug in all of these numbers with their 30% interest. It would take them 12 and a half years with $5,500 in interest to pay it off. I mean, stop it. We all see what's going on here, yes? Show business. Okay, you guys, let's get to the good part, the solutions. Okay, so my approach to helping T and her husband is going to be a little different. Since they are $885 in the red each month, I need to start with that. And the advice that I'm going to give here, honestly, this is exactly what I would do, and that's why I'm going to be giving it. I am never going to tell any of you to do something that I would not do myself. And a lot of times the advice that I give is from personal experience, which means that I've actually already done it at some point in my life. Okay, so let's begin with that $885 that we are in the negative each month. And the first thing I'm going to tell T and her husband to do is to cut the cable and the internet. What I want you to do is use your unlimited Verizon data for now. We lived on the road in our RV for about 10 years. And during that time, the parks that we would stay at, they hardly ever had Wi-Fi. And even if they did, it was not very good. So I used our Verizon data at that time. I would use our phones as the hotspot, and I would connect my laptop when I needed to use it. I would connect one television at a time, and we would watch Pluto or Tubi or YouTube or whatever free app we could find. We actually watched a lot of PBS at this time as well. And I also had, and I'm not kidding, a DVD player. Running into a thrift store or stopping at a yard sale, you will probably find one. You may even already have one or know someone that will let you borrow or have theirs. By the way, digital media, which is VCRs, DVDs, Blu-ray players, are making a huge comeback. And the reason is that people are just sick and tired of all of these apps charging us for different television shows. I don't know if you guys have noticed this. I just noticed it a few years ago when I was on a Walking Dead binge. I had to go to different apps in order to be able to watch all of the seasons. I started off with Netflix, I think had season 1, 2, and 3, and then I had to go to Amazon Prime, and then I had to go to the AMC. It was just one after the other, and of course, every single one wanted me to pay for it. So people are kind of getting a little tired of that, and they're just starting to purchase these things instead, and then they own them and they can watch them whenever they want. Okay, so cutting that will add $289 back into your pocket. The next thing that I'm going to ask you to do is to cut your pet insurance. This one pains me. I have Uhtred. He is like a child to me. I would lay my life for this baby. But honestly, if I were in this situation, little buddy would not have pet insurance. You can always revisit it and add it back after the dust settles. But for now, mama needs that $67.08. Okay, T, next up is Verizon. Now, because you owe and are making payments on those 3 phones, you are essentially under a contract with Verizon. So unfortunately, you're stuck with them until all 3 of those phones are paid off. So what I want you to do is give them a call. Tell them you are in serious need of some overhauling. Just be honest. That person on the other end of the line is going to understand. They are regular people just like us, and they get it. Let them know that number 1, you need to dump the insurance on all 3 phones. Just let it go. I don't care what kind of iPhone you guys have. I owed on all of my 3 phones as well. They are all iPhone 14s, I think. So pretty new, and I actually just paid them off last month, and none of them ever had any insurance on them. Then I want you to have them go through your bill with you and just help you out. Where can you save? But whatever you do, do not give up unlimited data, because you're going to need that until you can get your house Wi-Fi turned back on. Then, once you pay those phones off, please switch immediately to a company like Mint. Of course, there are other cheap phone companies like Mint out there, but I personally use Mint, so I can safely say it is an awesome company. And in the future, eBay is where you should be buying your replacement phones. And I mean, when the phones that you have now are literally trashed. So that should be years from now. Also, on a side note, I don't know what companies you guys work for, but a lot of times you can get a little bit of a discount through what they call their corporate partner employee discount. When I went to look for it on their website, I ended up finding an entire page of discounts that they give. So I'm going to link that in the description below for you guys. But let's go ahead and guesstimate that after you dump the insurance, and maybe any other little things that they can help with, you've lowered your Verizon bill by $50 a month. Okay, next we are going to move on to your car insurance. Now, you mentioned in an email that your daughter's car is also on your policy. She is 22 years old and drives a 2023 vehicle. So I'm going to assume that she is working to be able to afford her car payment. And I don't know this, but I think that she's probably the third line on your Verizon bill as well. Now, what I'm about to say is coming from another mom of a 21-year-old daughter who has just recently started working full time and living on her own. I know they are our baby girls and we just want to take care of them forever. But T, you are drowning here. And honestly, even if you weren't, I still think it's time to have the you can do it on your own, and I know you can conversation with your daughter. I don't know the exact amount that her car is costing on the policy, but I would go ahead and hand that torch over to her. It's okay to have her on the policy if you're comfortable with that, but she should definitely be paying her portion. I would also have her pay her portion of the phone bill and the balance left for the phone payment as well. Now, we have been letting all four of our kids know that we are now focused on our retirement. And we've always been able to help them in the past, and we never made them pay us back. But that's just not the case any longer. They all understand they really don't have a choice, right? And that boundary has now been set in place. I know that you are also concerned about your retirement years. You and I are the same age, T, and I totally get it. Now you got to get the kids to get it. So let's say that your daughter's portion of the phone bill is $40, and she's going to start paying that now. And her portion of the current car insurance, will say a third of that. So that is $260. Those two things combined are $300 back into your pot. That is a substantial portion of that red amount. And we aren't done with car insurance. I find that monthly amount ludicrous. And viewers, I actually did confirm that that amount is monthly and that no one needs to be carrying SR22 insurance. T did let me know it is monthly and no one is carrying SR22. So that is her monthly amount for car insurance. So what I would do is have my current policy printed out so that I can refer back to it and get online and check every available car insurance company out there. I actually just did this myself. My policy renewed last month and it was $1,245 for a 6-month policy for one car, a 2018 Volkswagen. The car is only worth about $15,000. Why would I spend $2,500 a year to insure it? You're right, I wouldn't. So instead, I lowered my coverage substantially. I went from $100,300 with a $500 deductible, rental car coverage, and roadside assistance to $2,550, a $2,000 deductible, no rental car coverage, and no roadside assistance. Now I'm paying $567 for a 6-month policy. I am saving $678, which is $113 a month. I ended up saving more than I actually pay. And in case you're wondering, I switched to Progressive. So T, I don't know what your coverage is, but let's lower it and save some cash. Again, you can revisit it later and up it if you want to. Now, if you do all of the things that I just mentioned, you guys will be down to $116 in the negative. That is a big difference from almost 900. And this small gap can be filled with side work and selling items. And I have said this before, even stuff you like. If it's worth something, sell it. Let's say you have a dining room table that you can put on Facebook Marketplace and get $350. Sell it, pocket 300, take the other 50 and go to a thrift store or a garage sale and buy a cheaper dining room table to replace it with, and then take that $300 and pay off MoneyKey. And a lot of times with larger items like that, people love to ask if you'll deliver it, right? On Facebook, will you deliver? Guess what? T has a truck. Yes, you will deliver and you will charge them another $50. Now, I have detailed videos on both of these subjects, side hustles and selling items. I'm going to link those below for you and your husband to watch after you watch this video. And really quick, the Neighbor app. I have mentioned this before, and you said that you have half an acre of land. Can you rent some of that space on the Neighbor app and fit maybe 4 or 5 small boats and RVs? Do you have a garage or a shed that you can clear out and rent some of that space? Definitely check out the Neighbor app. You guys can make some easy cash on there. Next up is your vehicles, both of them. And I'm not real big on telling people to dump their vehicles because I know that 99% of the time we're upside down anyway. So what is the point? But all of that we just went over is just taking you guys back down to zero from the $855 that you're in the red. You're just squaring up, and you can't live like that realistically. You'll never be able to pay off those high interest loans. And I feel like you'll still just be living paycheck to paycheck, and your hard earned money that's coming in is just going to keep going right back out. Those vehicle payments are the obvious thorn in your side, and they are going to keep you from ever being able to get ahead. I was in a situation where I had to voluntarily surrender my vehicle. I could not afford the payment at all, so I called PNC Bank and I said, just come take it. Yes, I took a big hit on my credit report. Yes, it screwed me up credit-wise for years. But you know what? I needed to be out of the credit game anyway. I obviously wasn't very good at it. But you know what it also did? It gave me back that huge portion of my income so that I could survive and pay my bills. So you guys, I went from driving a brand new supercharged Pontiac Bonneville SSEI to a 1989 Ford Festiva. I could not make that up. But you know what else? The insurance was cheaper. It was easier on gas. The tires and the oil changes were cheaper. I could actually afford this little car. And yes, it got me to the same places. It got me back and forth to work. It got me to my daughter's school. It took me to the grocery store. Check me out now, you guys. I survived. So T, I really want you and your husband to sit down and talk about this. Would you consider surrendering one or even both? Are your credit scores really that important to you to just keep this up? And hear me out on this one. Would you consider going to a buy here, pay here like I did and getting a really cheap car? Now, some people might be watching and saying, oh no, don't tell them to go to a buy here, pay here. The interest is so high. It's like 30%. You guys, I preface this with hear me out. So hear me out. Number one, I don't know what you have to sell, but maybe you have some stuff that'll net you some cash. So just try to take as much as you can for the down payment so that you're obviously not financing quite as much. And you guys already know I got to do the math, right? So I looked at some buy here places around me, and they were ranging anywhere from $7,500 to $12,000 for a lot of the vehicles. So let's go in the middle and say $10,000. We'll go ahead and go the 5 years at the 30% interest. We'll put $500 down. We'll add the $1,000 for the tax, title, and fees. And what do we have? A $362 car payment. Yes, the interest is crazy, but right now combined, they are almost at 27% interest on $77,148. I think we got to go with less crazy, and they could start paying off some of those high interest loans. Okay, and number two, some of you might be saying, those cars are junk. Are they? The one that I bought lasted me for 2 years until I could afford a little bit of a better vehicle. And you know what? It never broke down on me, and it ended up being one of the best cars I've ever owned. And my son, he recently bought Fern here. when we were in California for $4,500 from a buy here, pay here. What he did was he sold his car in New York for $4,500. He came to stay with us in California for a little while so that he could save up some money. He started working and slowly did the upgrades on the car. He got new tires and rims. He tinted the windows. He redid the interior. He bought used seats. He ended up driving that little buy here, pay here car from Sacramento, California, all the way back to upstate New York with no problems. He then sold it for $6,300. So they are not all bad cars. Have a mechanic look at it before you buy it if you can. We actually went on gut feeling after looking at so many cars. You can kind of get a feel for what's junk and what's not. But T, is it maybe even possible to get by with one car? Could one of you Uber to work and back? It's just that you guys are paying $2,000 a month in vehicle payments, and having any portion of that money back could really change your lives. Now, remember that every creditor is different. You are definitely going to have to call both of them and find out what your options are first, but I would definitely call and ask. Most of the time when you hear like horror stories of garnished wages and creditors coming after somebody, it's because people try to hide. Now, if you do decide to keep both cars and change nothing, put those things to work to offset those payments, especially that truck. And what I mean by that is put up some posts on Facebook. If someone needs to move something, pick something up, go to Home Depot, whatever, your husband and his truck will be there. Put in the ad for them to PM you for pricing and make a decision on that once you know exactly what they need, how much time it's going to take you, how far you need to go, just all of the details. Then give them a price. You guys could even offer to pull like small RVs and boats. Trucks are very useful. And you guys could rent both of your vehicles on the Turo app when you're not driving them. And of course, we've always got Uber and DoorDash. Now, all of these things that I've mentioned definitely require you to notify your insurance company. So make sure you do that before you do anything else. I also want you to call every single creditor that is on that sheet and ask if they have a financial hardship program and to connect you to that department and find out what they can do for you. And you guys, bankruptcy is an option as well. I personally have never filed, but I know a lot of people that have, and there is no shame in filing bankruptcy. I would consider it a last resort, and you would definitely need to contact a lawyer and make an appointment to weigh all of that out as well. It is a long haul process, but I would not rule it out. I feel like it's worth a discussion. You guys have some tough decisions to make, hard conversations to be had, stuff to let go of, physical stuff and emotional stuff, right? Your credit is probably going to take a hit. But in the end, the good thing is, this is not life or death here, right? You guys are going to come out on the other side. I also want you to consider food banks and contacting 211.org. These people are amazing and they will connect you to any and all of the assistance that is available to you in your area. Use those resources that are available to you when you need them. That's what they're there for. I've mentioned before on the channel how the Salvation Army helped me when I was struggling, and I will forever be grateful. Now let's go back over and take a look at your budget coming up. Okay, so as far as a budget, I do have your October and November calendars with your paydays and all of your bills written on them. The difference here is I have no idea what you and your husband are going to decide to keep, get rid of, call and negotiate, put a pause on, all of these things that I talked about in today's video. So here's what I would do with your next coming paydays. Hubby has a payday coming up here on the 21st, and I know Rise and Quick are taking their payments. Once those are gone, you will still have $1,370. And let's take a look at what's coming up due. You've got the Milestone, MasterCard, and your two Capital Ones over here. I want you to call them and ask about those hardship programs. Get some kind of repayment plan going with those. Then you've got your pet insurance. As I said, I would cancel this. That's going to save you almost $70. And then over here, you've got Geico coming at you, and I really need you to see if you can get that lowered before it is due. You will have all of this week to look into that. Hold on to the rest of your husband's money unless you're behind on something for your 4 walls. Then when you get paid here on the 31st, your paycheck actually covers your 4 walls. You make enough to cover your mortgage, your utilities, your property, and then I want you to take the $300 for groceries, $100 for household, and $120 for your gas. Pull that money out in cash. So that would be $520 of your paycheck pulled out in cash. I want you to have envelopes for those and stick to that budgeted amount. You will still have $342 after that, and then your car payment is due here on November 5th. And if you haven't made a decision yet on what you're going to do with your vehicles, use your husband's pay on the 4th, add it to the $342 that you have left, and make your car payment. If you need breathing room while you and your husband are talking about what to do with your vehicles, call both of those creditors and ask them if you can make an interest-only payment on the car and the truck. I want you to see if it's even worth it. It might put a few $100s back in your pocket and give you another month to think about what you're doing with your vehicles. I'm going to type all of this up, scan it, and email some detailed instructions to you. You guys are in survival mode here, and you've got to get focused on the 2 of you, your home, and being able to make these decisions together. And to help you with that, I'm going to be sending you a gift card for the 2 of you to take Financial Peace University. You will have a coordinator to help you and a class full of others that are in the same position to connect with. This is your life-changing moment, T. I know you will take this and run with it. No more stress, no more robbing Mary to pay Martha, no more feeling totally defeated. Viewers, please do me a favor and leave a comment of encouragement for our friends T and her husband. Thank them for being so vulnerable and laying it all out for us to learn from. And if you had any ideas that popped up that you think may help them, please add it. You'll be helping more than you realize. Now, if you liked this video, make sure you hit the like button so YouTube gets the message, pushes it out to the interwebs for more people to see and hopefully help them too. Now, if you would like to be considered for a future True Story budget video, look in the description for the details. I am still working on a fee schedule for those that want to skip the line or are looking for more long-term coaching. Subscribe to see more videos like this one. In the meantime, if you are like 50% of Americans that still don't have their $1,000 emergency fund, click here and watch this while I take you step by step on how to do it so that you can be a part of the other 50%.